Hi, my name's Claire Gallagher. I'm one of the tutors here at Tolley Exam Training, and I'm going to run through a session which will hopefully help you with your ATT Paper 1, Paper 2, or your optional paper in terms of the ethics questions that can arise. Now, we obviously have law and ethics e-assessments now, but we still can be tested on both law and ethics within the written papers. So what I thought I'd do in the next 20 minutes is just run through some topics which could come up as perhaps a 2, a 3, a 4-mark short form question, or perhaps as one of the requirements in a long form question. Now, the problem I think students have with ethics is a lot of people assume common sense, that the answers are quite logical. However, those of you that have received study packs for ethics already will have seen the guidelines, and the ATT are going to expect you to answer the questions using the specific buzzwords which are listed in the guidelines. So that's what we're going to look at over the next session. So let's take fees, for example. So one of the questions could be, how would you charge for your services? Now, as per the guidelines, there are 4 main ways of charging for your services. So this could be a 3 or a 4-mark question. Now, the first one is time and expenses. So what this means is you charge per hour, and depending on the skill or the seniority of the person that's completing the work, depends on what charge-out rate would be used. And if you incurred additional expenses, those would also be charged back to the client. Now, we could have easily talked about that. However, they're going to look for those specific words, time and expenses. Now, the second one is a fixed fee. So what you might decide to do instead is just to charge a flat rate for a service. So, for example, £500 to complete a tax return for somebody. However, the guidelines do say that this should involve proper costing. And what they mean is make sure you're aware of all of the work, because, of course, if somebody ends up having all different types of income, gains, investments, etc., then it could become quite a large job. And if you've got a fixed fee in place, you won't get paid any more for that additional work. So not only do the guidelines tell you to have proper costing in place, but they do also refer to a variation clause in case somebody does require additional services. So we've got time and expenses by the hour, and then a fixed fee where it's just a flat fee. Now, the third one that it talks about in the guidelines is a contingency fee, otherwise known as a success fee. So we obviously see the adverts for these, no win, no fee, not possibly as likely in a tax environment as what we see on the TV for the different adverts for perhaps an injury claim, but it is possible that some people may actually offer one of these contingency fees. So it's in the guidelines. It would be listed if it came up in the exam. However, we are told as per the guidelines to use these with care. Now, the fourth one is just that you may be paid through insurance. Okay, so that would be your fourth one if it was a 4-mark short form question, although generally this comes up for 3 marks and they're just expecting those first 3 there. Okay, so hopefully you can see by the fee example that it's not about just explaining it, it's about using those key specific buzzwords. Now, what I thought we'd do next is look at a bit of money laundering. And I'm not sure if you are aware, but you do have the assistance of your legislation for this. Now, money laundering is based on the Proceeds of Crime Act, which is an act from 2002, and does actually come in the legislation, and because it's 2002, it sits, of course, in Book Part 1B. Now, it falls just before ITPA, because, of course, ITPA is 2003. So, Proceeds of Crime Act, you will find just before ITPA, and you are looking for Part 7. So, it's a rather large act. You're looking for Part 7, and from Section 327 onwards. Now, what this piece of legislation does is it gives us an easy answer to a 3-mark short form question, which may ask us what the money laundering offences are. Now, if you turn to Section 327 in your Part 1B legislation, you will see Section 327 talks about a person commits an offence if he conceals, disguises, converts, transfers, or removes criminal property. So Section 327, and actually goes through to 329, talks about the main offences. And again, if we have a look at 328, it tells us a person commits an offence if he enters into or becomes concerned in an arrangement which he knows or suspects facilitates the acquisition, retention, use or control of criminal property. So that's section 328. That would be your second offence in that question. And the third offence is section 329. That's when a person commits an offence if he acquires, uses or has possession of criminal property. So what you have there in section 327 to 329 are the main money laundering offences. If it comes up in your short form questions or perhaps as part of the long form, then you can just open up your ledge and copy it down. Now, while we're actually in this piece of legislation, I'll just bring your attention to a few other points just in case it is worth more than 3 marks and perhaps sits in a long form question. It does continue, so section 330 talks about failure to disclose, which of course is another offence. And over the page it does also in section 333A talk about the tipping off offence. So of course if a client was to ring you up or a prospective client was to ring you up, you smell a rat, you think they're a bit suspicious, but you tell them that, then obviously that's tipping off because they can go away and perhaps remove, destroy all of the evidence. So that in itself is an offence. Now what we also have in the legislation in section 334 are the penalties. So section 334, that's your penalties. So again, if you had a more specific question to do with how long you can go to prison for, depending on what your money laundering offence was, then you can just look it up there in section 334. Now hopefully you found that quite useful. So let's just stick with money laundering whilst we're talking about it. You could be given a scenario in the exam where perhaps you're suspicious of somebody and they want you to explain what you'd need to do in that situation. So if we are ever suspicious, remember there are 3 steps in which we're supposed to follow. Now the first one is we should report to the Money Laundering Reporting Officer. And we do abbreviate this to the MLRO. Now, if you just said, I'm going to report it to a member of staff, that's not going to get you your mark. You need to specifically say Money Laundering Reporting Officer. Now, what will then happen is they or you will fill out a suspicious activity report, which again is otherwise known as a SAR, Suspicious Activity Report. And then what will happen with that SAR is it will be sent to SOCA. Now again, it's all about the key terminology here. SOCA is the Serious Organised Crime Agency. So that's where that Suspicious Activity Report would be sent to. So again, if we get a question asking us specifically about what we should do if we're suspicious, those are the 3 stages that we would talk about in our answer. Okay, so hopefully you're feeling a bit more confident with money laundering. Let's have a look at another chapter from our guidelines, which is conflicts of interest. Now again, you could be given a scenario where perhaps you act for both a husband and a wife. They're getting divorced and you need to know what type of action should take place or could take place. So it may not be a husband and wife. It could be that an advisor is working for 2 clients. They have some sort of deal going on between them and you need to talk about the options. Now if this comes up, it's generally a 3-mark question. And the reason it's a 3-mark question is because we have 3 options. So we will either act for one, we will act for none, or we will act for both. and those are your 3 options. Now, if it did require a bit more, what we could say about these 3 options is if you are going to act for both of the clients, you would need to perhaps have a very large company where you could have separate teams, and then each of the teams dealt with the different clients. Now, the key term for these separate teams is ethical rules. Okay, so that's a key term that you find within the conflicts of interest chapter in the guidelines. So that's the only reason we could act for both. We'd also have to disclose all of the facts to each of the clients. And then, of course, what would be the most recommended would be to act for neither. So in a question, you're not going to think about your pockets, you're going to think about what's right. The best thing to do would be to just act for neither of them. Because that 3rd option, in terms of just acting for one, obviously you've got to choose which one you're going to act for. And it might be the one that you've acted for the longest, but either way, you'd need to obviously advise the other one of the decision and advise both of them of the conflict as it arises. Okay, so again, that's a nice 3-mark short form question. What are your options if there's a conflict? Well, I act for one, or I act for none, or I act for both of them. Let's take another rather important topic, which is engagement letters. Now, a lot of you will be comfortable with engagement letters because you will see them a lot in practice. But the type of question we could get in the exam is perhaps, what are the minimum contents? Now, again, it's quite easy to think back to your own procedures at work, to think back to your letters of engagement and write down certain things, but we're going as per the guidelines. So in terms of what we deem to be the minimal contents of these engagement letters, you're looking at the name of the client. So you need to think of who it is for, who you're acting for. We also need to put down the period of the engagement, so how long this is going to last, this relationship, and the scope of the work. So what is actually going to happen, what kind of work are you going to be doing on their behalf. So who, when, what. Now the other things that we need to make sure we put in is the limitation of liability. So limitation of liability is how much you could be sued for if, for example, something was to go wrong, there was a complaint and you ended up being sued. So we need to put that in the engagement letter. And then also fees. So it's always good to agree fees up front. So if we put them in the engagement letter, we say exactly how we're going to charge, then there can't be any disagreements, hopefully at a later date. And then the final thing that we always ensure we have is the agreement letter, because we're going to pop all of this in the engagement letter and then we're going to get our client to sign to say they agree with the terms. So these are what we deem to be the minimum contents. So like I say, I tend to think of who, when, what, how much, that's our fees, and then the limitation of liability is often the one people forget, and the agreement letter is of course the most important, because without the client signing, then you're not really going to get very far. We need to know they're happy with what we're set to do for them, how much it's going to cost, etc. Now, where I've jotted down the limitation of liability, let's just expand on this. So limitation of liability, we talked about the fact that's what you could actually be sued for. So what I'm going to do is just expand on this and talk a bit about professional indemnity insurance. Now, if you have a look through your study packs, you will see there are separate parts to do with professional indemnity insurance, and there's a lot of information in there that talks about how much you should be insured for, the excesses, how it can differ depending on the size of your business, etc. So what I thought we'd do is just talk about what could come up as a 2-3 mark short form question. And that's actually what you should be insured for, how much your claim should be set at. Now, the general rule for professional indemnity insurance is £1 million per claim. So that's what we should be insured for, the £1 million per claim. However, there is an exception to this rule. Now, if this was going to come up in the exam in a short form question, they're bound to give you a company, a business, where their gross fee income is less than £400,000. And the reason for this is if your gross fee income is less than £400,000, there's a special rule that says you will need to be insured for a minimum of 2.5 times your gross fee income. So the £1 million is generally the rule, but the exception to the rule is if your gross fee income is below £400,000, then we actually multiply the gross fee income by 2.5 times. Now let's just have a look at this with some numbers. So if this was a short form question, they could say to you, Bob's gross fee income was, I don't know, let's say £300,000. So if we're going to get professional indemnity insurance, what should his insurance cover? How much? Well then, because we're under 400,000, we're going to do 2.5 times that 300,000, which is 750. So you get marks for talking about the normal £1 million rule, and then you get a mark for showing that 2.5 times the amount of the gross fee income. Now, one extra thing I just want to add in here, where we have this rule of the 2.5 times the gross fee income, there is always a minimum of £100,000. So let me just run through another example to show you how this rule works. So if we take the minimal of the 100,000, let's say again, I have Bob who has a gross fee income, let's say of 30,000. Now, if he's got gross fee income of 30,000, alarm bells go off because that figure is below 400,000. So what we need to do is 2.5 times the 30,000, which is 75,000. Now, we're not finished there, because what we'd have to then say is we can't have him insured up to 75 because there's a minimum of 100,000 as per that rule that we've just mentioned. Okay, and that's how perhaps they could test it in a short form question. Now, one other thing I would just mention in terms of the professional indemnity insurance is they do talk about excesses. So in terms of, if you think about your car insurance, if you crash your car, you may have to pay an excess. We have the same for professional indemnity insurance. Now, the guidelines generally say that the excess for insurance should be a maximum of £20,000 per principal. Now, principal would mean if I'm a one-man band, I'm a sole trader, a maximum of 20,000 excess for me. But if I'm a partnership and we've got 4 partners, that's going to be 80,000 because that's going to be 4 lots of 20. Now, what the guidelines also say is obviously an excess has to be something that is possible. So we don't set it high when we could never pay for that amount. So obviously some people will take that down. So it's an actual affordable amount. Right, so we've looked at the fees, we've looked a bit at money laundering, we've looked at conflicts of interest, engagement letters, and we just expanded out to professional indemnity insurance. What I'm just going to cover is something that could really only come up on these ATT papers, because as you will maybe be aware, on the E-assessments, those E-assessments are sat by both CTA and ATT students, so the questions should be on things that are the same for both sets of students. Now, one thing that does differ is CPD. CPD differs in terms of the requirements depending on if you are a member of ATT or a member of CIOT. So what we'll do is we'll just talk about those requirements because, again, this could make a nice short form question that will sit on paper 1, paper 2, or one of the optional papers. Now, what the requirement is for ATT members is 45 hours per year. So once you've got your ATT, you are supposed to do 45 hours per year to keep up to date with your continuing professional development. Now, out of those 45 hours, we basically split it into structured and unstructured training. So structured training, this is where we have webinars, we could have just normal lectures, we could have workshops, etc. So all of those kind of things will count towards your hours, or you could have unstructured training, which is generally on your own reading. Okay, so there's no interaction with others, which is generally why reading is a good example of this. Now, in the exam, you could get a question that could perhaps say, give some examples of structured training, give some examples of unstructured training, and then you can list out those points that we've just made there. Now, the other thing just to note is obviously the hours are different for the CIOT members, as you will have seen in your guidelines. So we specifically need to know the 45 hours per year. And of those 45 hours per year, we have to have at least 15 hours for structured training. Okay, and then the remaining hours can, of course, be unstructured. So as long as you are covering your 15 hours with lectures, workshops, seminars, etc., then your remaining hours could be covered by you reading, basically doing things without interaction of others. Now, just before we finish this session, I'm just going to run through one other topic, mainly because it's one of these things that people do go with their kind of common sense approach on and do get it wrong. So let's just take a couple of minutes before we finish to have a look at errors. Now, in terms of the guidelines are split into different booklets, and one of the booklets deals with errors, and it's basically giving scenarios of, let's say, I've got a client who hasn't disclosed £10,000 worth of income, which means they haven't paid £4,000 worth of tax. Now, if you had that come up as a scenario in the exam, you'd need to talk about the steps you'd need to take, and the first one, of course, would be to advise your client to disclose. Now, what you could do is, rather than have to ask your client to disclose, when you actually take on clients, you could put a paragraph in the engagement letter so that when they sign the engagement letter, they're signing to say they agree to you disclosing any errors to the revenue if they were ever found. Now, that would then avoid this issue of having to go and ask their permission to actually disclose. Now, if the client says no, you would then need to inform them of the penalties. And obviously, Schedule 24, Finance Act 07, talks about incorrect tax returns. You look at the whole careless, was it deliberate and concealed? And then we look at prompted, unprompted disclosure. Now, that's not relevant for ethics, but of course that's more relevant when we look at actual admin, which could come up on paper 1, paper 2. And depending on which optional paper, that could also come up on there. So it's all relevant. We'd inform them of the penalties. And again, if they say that we're not allowed to disclose, we cease to act. So these are the kind of things we jot down in our answer. Now, it's point 4 that lots of people get wrong, because we're going to cease to act and we're going to tell the revenue, but we're only going to tell the revenue that we no longer act. We do not tell the revenue the reason why. And that's what I often see in terms of students' answers. So you're right, you need to tell the revenue, but what are you telling them? You're telling them that you no longer act for the client. Now, if this was a 4-mark short form question, then you've got your points there. Perhaps what you could also pop in is also to consider money laundering. So if any doubts, it's always worth going to your money laundering reporting officer if you are ever suspicious of anything. Okay, so that was a reasonably short session. Hopefully it's helped you. So when you're looking at your paper 1, your paper 2 or your optional paper, when you see the ethics questions, go back to what we've seen here. If you want, you can now go through the guidelines, try and summarise them as I have done here, but also if you practice past paper questions, you will see similar things coming up and hopefully you'll be able to make a good attempt at them. I hope you found this useful and good luck for your exams.